Go ahead and go into my first guest here. I've got Brian Powell and Michael Lara of Prospect Mortgage in studio with me today. Brian Powell, he's the area manager with Prospect Mortgage. And after studying medicine at the University of Akron, the Florida climate coupled with a desire to pursue a career outside of medicine, Brian found his way to the Tampa Bay area and the growing housing market led him to work as a mortgage broker with the home buyers in our region. Since then, he has spent nearly 20 years in the mortgage and financial services industry and has previously held senior level positions with both independent mortgage lenders as well as large federal banks. Brian joined Prospect Mortgage in 2011 and now serves as their West Florida area manager. Since joining Prospect, he has enjoyed their purchase bonus focus and continues to enjoy working directly with home buyers. Brian, welcome to the show.
Thank you very much.
So tell me a little bit about Prospect Mortgage.
I always consider Prospect Mortgage one of the largest mortgage lenders that most people outside of our business probably haven't heard of. You don't see us on TV all the time like a lot of the bigger lenders, but we are a purchase-focused lender. We're considered one of the largest independent residential lenders in the country. What we mean by an independent lender means that we are not owned by a bank. Okay, that means that we're lending our money versus a bank where we're not considered a depository lender. So we're an independent lender. We're backed by a large fund named Sterling Group. It's about a $5 billion private equity fund that backed us. And Prospect came into existence in 2007, right as the mortgage markets were blowing up. They found that when they were looking around, that as companies were having issues with liquidity, that type of thing, there were some very talented people that became available in the market. So they took advantage of that and put together a great team. And post mortgage meltdown, we came out of the ashes. And since then, it's been a good ride.
Okay, so Prospect Mortgage is privately held, you said?
Yes, we are.
And is a national brand as well?
Yes, we are. Yes, we lend in all 50 states.
Okay, and what type of products do you lend on? I mean, do you utilize, home path financing, 203K loans? Let's talk a little bit about that.
Yeah, absolutely. We have, as a private lender, we've put together our focus that we want to be a purchase-focused lender. There's a lot of lenders out there over the past 3 or 4 years that really jumped on the refi train. And not that we didn't do some refis, but we really focused our company on working with home buyers and working with real estate agents, helping them get into homes. So as that, we have a very broad spectrum of products and programs that we have to offer. We try to focus as much as we can into bringing new products to market so that we can give buyers additional means to get into a home. We do an awful lot of home path renovation, home path properties, 203K, and then of course your standard FHA, conventional, the standard mix.
Okay. Now, does Prospect offer any type of financing that's specific to just Prospect?
It's going to be an interesting one that I'm sure we're going to discuss a little bit more. We do have a special program that we have under the Home Path Renovation program. Home Path being a Fannie Mae product, and some of the homes that aren't necessarily in as good a shape require renovation. We have a special program that we deal with investors that allows us to do typically the max number of properties that can get financed by a typical lender would be 10. We have a special waiver with Fannie Mae where we can do 11 to 20 on that particular program.
Okay, say that point there. I want to come back to that here after the break and everything and talk more about that because I think that's a great product that investors in the Tampa Bay region can use. Now, you mentioned home path financing, and for the listenership out there, when we talk about home path financing, that is a product that's put out by Fannie Mae, which is a large holder of foreclosed properties, and properties that are owned by them, you can utilize home path financing, and the advantage of that is there's no appraisal required, and there's some other perks. What are some other perks of home path financing other than no appraisal?
Probably the one that people utilize the most is that at some lower credit scores, it gives you a smaller down payment versus a traditional conventional mortgage, and there's also no mortgage insurance involved in that. So when the home path program was kind of birthed out with Fannie Mae, the mortgage insurance companies, the private mortgage insurance companies, weren't so anxious to jump in and give mortgage insurance at the riskier loans. So what happened is Fannie Mae came up with the Home Path program, which waived the mortgage insurance requirements. It was based on underwriting criteria, but not necessarily the same that the private mortgage insurance carriers were doing.
And it's been a great product, and a challenge in selling the bank properties is the condition issues. All the properties are sold as is, and the Fannie Mae Home Path mortgage allowed us to, convey the property through a mortgage that didn't require an appraisal, so we didn't hit those lender-required repair issues. Unfortunately, as I discussed on my show last week, the Home Path product is going away in October of this year. So a lot of real estate professionals that deal in the foreclosure markets, as well as Fannie Mae asset managers, are distraught over that decision. It'll make selling the properties which are already a challenge to begin with, that much more difficult.
It's going to be an interesting transition. You receive a lot of the same information we do. We're not sure exactly what the changes in the program are going to be. HomePath is still going to continue to issue properties, but we're not sure what the lending requirements are going to be at that point. So it can be an interesting couple months here after that.
Yeah, the guidance that we've been provided is that as of October of this year, there will no longer be HomePath financing offered on any Fannie Mae properties, and so you'll have to have a property under contract by the beginning of October of this year, and it's got to close by the end of the year. And after that, as we understand it, there's no more HomePath financing. So stay tuned here. We'll be talking more with Brian Powell of Prospect Mortgage here after the break, and about this great investment product that you could use for purchases in the Tampa Bay region.
Jamie Meloni. Now, here's Jamie.
Hi again, everybody. Thanks for staying tuned in to the Jamie Meloni Real Estate Show here on 1250 Wins WHNZ. If you're just finding my show for the first time, I invite you to tune in every Mondays at noon, as my show aims to become your information source for the Tampa Bay real estate market. If you were following us here before the break, we've been talking with Brian Powell of Prospect Mortgage, all about some mortgage products and some great products that they have available for investors in the Tampa Bay region. Stella, you had a question you wanted to mention off air.
Yes, Brian, we know that Fannie Mae favors the purchase of homes by home residents.
Yes.
And so I was wondering, as far as HomePath financing is concerned, is it only available to home residents?
No, it's available for owner occupants, people that are going to move in, families or whatever. It's also available for second homes and for investors as well.
Okay, so that's great news. And I have another question about this HomePath financing. Who is stopping it, and why are they wanted to remove it?
We really don't know. It just kind of came out of left field. We're seeing a lot of changes kind of come through the real estate mortgage business. I announced on the show last couple weeks ago with HUD properties, they're no longer providing the appraisals, which historically they've always provided. Upon acquisition of the properties, they have the properties appraised, and they're no longer providing those to borrowers. And now we've got HomePath financing being eliminated by Fannie Mae. I don't know. I don't know if this has to do with you hear all these rumors about the CFPB, the new Consumer Financial Protection Bureau that's out there that's regulating the industry. I don't know if it has anything to do with that. There's been just a lot of misinformation, just kind of things that kind of popping up out of nowhere. Even the HomePath thing was kind of out of nowhere, and the HUD appraisal thing was not even. There's not even an official mortgagee letter out on guidance from that. That's expected, and a mortgagee letter is something that HUD provides to the lenders on. This is the guidelines, this is the regulation. There's not formal formal guidance just yet, so that's expected. But as of right now, a lot of brokers are out there confused. A lot of lenders are confused. They're like, "Where's the appraisal? You got a HUD property under contract. What do I do?" And so I'm still just kind of playing it by ear. And so much of what I've learned through the years, I learned through experience and through the deals that I do. I always say that the stuff that I know isn't taught in any classroom. It's just stuff I've learned through the experience of conducting so many deals. So Brian, I want to talk a little bit. You had mentioned before the break that your Prospect has a program specifically geared towards investors. Tell me a little bit about that.
What they're looking at is it's a professional investor. We're not looking at somebody who just recently went to a flip class or anything like that. It's a professional investor. It's geared more towards someone that is looking to buy and hold, someone that has already financed at least 10 properties. Usually under Fannie Mae limits, the maximum amount of financed properties you can have is 10. Under this one, we have a special waiver that will allow them to finance HomePath-only properties up to 20 properties. It gets a little difficult to work with somebody that owns that many properties, just for the fact that there's just a lot of documentation that's involved. But once you set the initial kind of set number 11 up and then work your way up, all you're basically doing is updating the assets as they continue to accumulate more.
Wasn't the number of financed properties at 4 for a while?
It was at 4 for a while. There's a lot of lenders that stay at that 4 cap. There are special waivers that lenders can get. They can go up to 10. But a lot of lenders do have a 4 cap as well.
But Fannie Mae guidelines does allow for up to 10?
They do allow up to 10, yes.
Okay, and now Prospect goes up to 20 now?
Yes, but it has to be number 11 through number 20 have to be Fannie Mae HomePath properties.
They have to be. So how's that going to change with this new restriction? I'm not to say restriction, but the elimination of the HomePath product. Do we know yet?
We do not know, but I wouldn't be shocked if that waiver does go away as the program basically tends to tighten up as we look at it from the lender side. I would consider that that's probably going to be something that steps to the wayside.
You're saying you expect that product to go away at Prospect, unfortunately?
If I was a betting man, I would say probably.
And what type of interest rates do they carry after 11, 12 properties? I mean, are the higher risk, obviously. Does the interest rates go up substantially?
No, they don't. They're actually a very competitive rate because this requirement, or on this particular program, it does require a 25% down payment. Okay, because of that, there's not a lot of hits or adds to the rate. So I would say probably on average, if you're looking at an investment property and say you own 2 properties versus this one where you own 11, you might see an eighth of a point difference in rate, but nothing substantial by any means.
And is this something that that is held in house then essentially? I mean, are these loans sold on the secondary market at that point?
Yes, they are. Yeah.
Okay.
Prospect sells about 95% of what we sell. We sell direct, or what we originate. We sell directly to the agencies, to Fannie Mae, Freddie Mac, Ginnie Mae.
But after 10 properties, how are you selling the properties?
It's going directly to Fannie Mae. It's a special Fannie Mae waiver that we have.
So if you got a special Fannie Mae waiver that enables Fannie Mae to purchase the properties when they're owned. Okay. And you also have a foreign national buyer program. Let's talk a little bit about that.
Yeah, that's been a recent development with us. We launched it here about 2 or 3 weeks ago. What we've seen in the Florida market, you've obviously see a lot of cash that's coming in from overseas. A lot of buyers that are looking for second homes. If you look at the Miami market, it's just completely on fire based on cash from Central and South America. And under this program, we went to Freddie Mac and said that this is what we want to do. And we came up with a set of guidelines. They agreed with it. So what we've actually set up is it's a foreign national second home buyer. So this isn't something that we're looking for investment properties from overseas. This is a true second home. But it's given us the ability to offer it with only a 25% down payment, which in the current market, most people are looking at 35% down payment if you are a foreign national.
Very nice, very nice. And let's talk a little bit about renovation loans. That's always, a great talking point. I think it's an area of real estate that scares a lot of real estate professionals. But tell me a little bit about how renovation loans can help buyers get into homes and how you can assist them.
I personally love the renovation loans. Prospect has made a real commitment to renovation lending. We're considered the second largest renovation lender nationally. So I always tell people this isn't just something we offer; it's something we actually do. What I look at in our market here, over the last couple of years, we've seen a lot of people that have had trouble getting into a home just from the fact that a move-in ready, a great home, there's multiple offers that show up. There's a lot of competition for those homes. So people kind of get pushed out of the market. But what we found is that if someone's willing to live around a little bit of dust and some paint and stuff, that they can get into a home, they can renovate it to exactly what they want to do, and we can help them finance that renovation. So it's not like you're buying a home and you have to have this huge lump sum of money outside of the closing. We can help finance the renovations for you as well. Yeah,
and the key to using a renovation loan is that the property must appraise, after repaired value at a point where the acquisition price is low enough that you can add the repairs on top of that. But you can go over the appraised value, right? For instance, if the after repaired value on a property is $120,000 and the purchase price is say $90,000, if repairs come in at $35,000, the after repaired value, or can you do that?
Under the FHA program, yes, you can. There are we have a couple of different programs. As I mentioned, we offer renovation for home path properties, but then we also have a Fannie Mae and an FHA program that we allow. And under the FHA program, it does allow you to go above that final appraised value. So, we're fortunate. A lot of the people who are buying these homes they're getting them at a good price. They're bidding right. They're getting their homes at the good price. They're not trying to over-improve the properties in a lot of cases. So, what they're doing is they're taking a pretty good home and they're making it, a great home, and it's fitting into exactly their needs. So we don't run into a lot of that. But if you do have a situation where the equity's not quite there, we can definitely help them out under the FHA program.
And it seems, as a real estate professional, so many realtors are scared of 2 or 3K loans. And where does all the, this fear come from? Where's the problems in this loan?
I think what happens is people overanalyze the loan. They look at it as, there's this whole thing where you have the loan and the renovation, and there's all this stuff that they're looking at it. I break it down to a very simple program where the underwriting guidelines are exactly the same as a regular loan. If you're doing an FHA, a 203K, which is a renovation program, if you break it down and look at it, all you're doing is you're doing a regular purchase loan, and then on the side, you're setting up an escrow account to pay for the repairs. And don't overanalyze the fact that everything is the same for the underwriting of your loan. The only difference is you have to provide a little bit more documentation so that we can see what you want to do for your renovation.
And I think a lot of buyers get off track where they're kind of talking to multiple contractors? I mean, is it advisable just to pick one contractor from the get-go to get it done quicker? And then
I always advise people to get it, be decisive. You don't change your mind a whole lot, because that's where a lot of the delays will show up. You have somebody that you're a week away from closing, and they decide that instead of putting in tile floors, that they want to put in hardwood. And then that suddenly starts changing the complexity of the loan. You have to look at things as how the value is affected based on those different items. So, be decisive, get in there, determine who you want to do the work, and determine it early on, and stick with what you want to do and see that through. And it's really basically a normal loan unless you're indecisive.
And let's talk a little bit about what a loan-ready buyer is. And something that I bring up on my show a lot is the importance of getting yourself approved for a mortgage prior to entering the mortgage markets. Talk about this a little bit.
Absolutely. What we find is, the statistics will show about 90% of buyers right now will start their home search online. So what they'll do is they'll start searching for a home. They'll say, hey, I like this house. They'll call up somebody like yourself or a member of your team, and they want to go see a house. What I would say is be loan ready. That way, when you find the house, you need to know what, when you're walking into a home, know what you can afford. Okay, don't just kind of guess and say, you know what, I would love to live in this $300,000 house, but I make minimum wage. Mm-hmm. Know what you can exactly afford. Let your lender review your documentation, your income, where your down payments are, that type of thing. So you can really take a look, and the lender can definitely say, I can do your loan. This is how much you can buy. This is how much you can afford to pay on a monthly basis. Yeah, and it's a common, complaint amongst real estate agents. People call the realtor before they're approved for a mortgage, and they want to go out and look at properties, and they get upset when the realtors want to go out and show them the properties, and and they ask them, are you pre-approved? Can you provide me a documentation? And many times, they are, but many times they are not, and it's a common, just miscommunication that has developed in the real estate business through the years. And I encourage, and I've heard you do this a number of times too, I encourage my buyers to even go a little bit deeper than a pre-qualification, which is a credit approval, where someone's just kind of looking at your credit, but you're actually telling them, I've got $5,000 in the bank and I make $3,000 a month. When you actually go to the level where you get pre-approved, where you're actually having someone take a look at that documentation and can verify, yes, this is how much we're going to state that you make, and this is how much money you have available for a down payment. Yeah, and absolutely, because at that point your offer becomes just about as good as cash, and your only contingencies are the appraisal and the title of the subject property, and especially in the Tampa Bay market where 40% of the market is cash controlled, 45%. I mean, you can't come to the table with just a pre-qualification letter. And if you're competing with the bank-owned properties, there's a lot of competition amongst investors. So it's very important, to get that pre-approval, a full approval in place prior to entering the mortgage markets. So a lot of great information there. Brian, tell me a little bit about how the listeners can get in touch with you off the air. Okay, well, Prospect Mortgage has two offices. One in our market has two offices, one in Riverview and one in Tampa. I'm actually seated in the Tampa office, and can be reached at my email, brian.powell@prospectmtg.com, or probably the easiest way to get a hold of me is my cell phone, 813-900-4668. Again, that's 813-900-4668. All right, a lot of great information, and Brian, thanks for coming on to the show. I greatly appreciate the information. Thank you. And if you didn't catch that information, you can find him up on the Tampa Bay Radio website in the past guest section after the show. So if you want to reach out to him, a lot of great products, especially if you're an investor here in the Tampa Bay region, reach out to Brian Powell with Prospect Mortgage. If you're just tuning in, you've been listening to the Jamie Meloni Real Estate Show here on 1250 Wins, WH&Z. Coming back from break, we're going to be talking with Debbie Wilson and Sue Canner of Groutworks, so please stay tuned.
In the market for a reverse mortgage? Contact Access Reverse.